Thank you for tuning in today, All In Crypto. It is November 16th, 2024. So, today I wanted to start with helping you guys understand order types and candlesticks. I want to go into the basics for the people that are just starting with us. I want you to understand, where to really start. We're going to go over obviously we all know what crypto is. We're all here because we know what crypto is, but I want you guys to start knowing the order types, the candlesticks, the real basics today. And I'm going to do a step-by-step video boot camp. You start with one, you go to however many 12, 15 videos. Each will probably be two or three two or three groups of information on how to day trade, how to invest, how to place orders, it don't matter if you're doing spot trading, just buying and holding, or if you are doing leverage trading, which is obviously I don't recommend right away. I really want you guys to just do a demo account. If you're trying to get into trading, it's very important for a minimum of 6 months, I truly believe, to use a demo account and then transition into, once you're comfortable and you can show the stats, that you have a winning strategy that can, make you money consistently, which it might not be 6 months. Took me a couple of years to get to that point. And it's not in this video, but in another one, I'm going to go over how to track all your trades with Microsoft Excel. I will actually put up my spreadsheet that I have made, and you guys can save a copy and use it for yourself. It's already made and everything. So, not this video, maybe the next one, maybe later today I can knock it out and make a quick video on how to track your trading, which would be the second part to this. So, we'll see, either today or tomorrow. But I wanted to start with this. So, what are order types, okay? And there's buy limits, there's buy stops, there's sell limits and sell stops, but there's also market execution on both buy and sell. So I'll just start to make it real simple. The market buys and sells, okay? So when they say a market buy, all we're doing is say that we are, actually I'll just use the example of what I took today. So this is SUI. I saw SUI come into this support zone right here. It did come right into it. We've been very, very, very bullish. We've just been consistently going up higher and higher, as you can see. And we have been just catching every wave up. It's been amazing since the election. It has. I know it's not on there. I deleted it, but this was also previous trade. Honestly, I've been in this since down here at 45, 50 cent range. I think it was after this broke up, or this one here, and then I started getting in like 60 cents, something like that. And it has been very easy to just catch the pullbacks, ride it, pullback, ride it, pullback, ride it. But, sorry, I'm getting ahead of myself. This is the 4-hour chart. I think it's also important, real quick, for me to tell you about the time frames, okay? So, this is the daily time frame on the chart, okay? I know we're going to talk about candlesticks today too, but I need to also incorporate time frames. So on the daily time frame, or the weekly or the monthly, each candle is representing one day on the daily chart. Now if we go to the weekly, one candle, 1 week. One candle equals one whole week. And it obviously zooms out to the bigger picture. And it's very, 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 very important to always start at the higher time frames. I remember in my beginning stages of day trading, I would focus on this 1 minute and 5 minute chart. Hold on, let me. And sure, I mean, but we're talking about really, really close in there, just looking at, and you can imagine how much this can do, especially in a beginner, to their mental, the psychology behind the 1 minute or even the 5 minute chart can be nerve-wracking, especially in the beginning, because each candle is 1 minute, 1 minute per candle. And obviously, you go back to the daily, and it looks a whole lot different, doesn't it? And you got to remember that inside of one of these candles, we just got um we got all these little candles inside this one daily candle, you know? And the reason it's so important to start in the beginning, right, is, or on the higher time frames, is we need to get a clear picture of the market and where is it heading. So, I mean, when this first broke out, I mean, let's just say hypothetically, when this first broke out, to be honest, but we had resistance here, so it was kind of like we needed to break that. We did break above this, which is a clear instinct, clear sign that this is moving bullish. And you really could have just started buying up into here safely too, because it just kept going, right? And it's really important, and we're going to get more in depth on this. This is just, step by step, right? But I can give you a little bit of information on other things also at the same time. And we can tell on the 4 hour in the daily market or the weekly or time frame that we are definitely 100% bullish, right? So when you look at day trading, especially in the beginning of my journey, I would just constantly overtrade and do too much. And, oh, I gotta sell, I gotta buy, I gotta sell, I gotta buy. Like, yes, there is movements, as we can tell. This is clearly the big dog moves, the real the real money is getting all the buys, right? Timing the buys in these support zones, on these pullbacks. This is where the money's at. Why would you try, I mean, let's just, why would you try hoping to get a short position when this market drops here or here or here? These little moves, right? These little tiny moves that you just going, think of the bull or the bears as you're riding a wave. Say you're a surfer and you're trying to catch the biggest waves out there, right? As you're riding a wave, you know, catching the biggest wave and riding it the distance, right? Why would you go surfing up a wave, going against it, hoping that you're gonna succeed? I mean, it's just, that's the way you got to picture when you're entering the market, okay? And it doesn't matter if you're day trading or just buying to hold long term on spot, like even if you're just buying on Coinbase or any other exchange and just buying and holding it, like you want to get in at the right moments, right? You want to get in at the right prices. When we're at the bottom of the bear market, and I'm gonna do videos on DCA, dollar cost averaging, like I'm gonna go over all that. So, but that's for another video. Anyways, back to what I'm saying is just riding. You can clearly see. Let's break it down to the 1 hour chart. So each candle is 1 hour. Remember that. Let's go back down to this, and so my favorite, I start on the daily, maybe even the weekly. The 4 hour and the 1 hour, okay? And that's where I look for my zones, you know, my support zones, my resistance zones. Start doing your Fibonacci's, which is a whole nother video. I'm not even going to get there yet today. And then, so we're looking for the right movements. And as you can see, this morning, I caught a good movement, which I called out on my group and everything, and also called out this Bitcoin trade still riding and this Solana trade still riding. Called all these out, okay? And obviously, if you want more in-depth help and training and mentorship, please leave a comment, message. All my social media profiles are on my account. Add me, message me, get in touch. I'm always here for I'm all ears, and I'm always here to help people out, okay? So what I'm getting at here now is we're going over time frames. We dived a little bit into support and resistance zones. We're going to do more in depth on that, but today we're talking order types, candlesticks, okay? Real basics. So now, if you were trading, okay, you would be putting, let's say we're going to keep it simple. We're going to talk about market buys and market sells, okay? So if I wanted to, on whatever exchange or whatever you're using, put in a market buy, that means that you are putting it in at that exact price. So say the market hit right here and I put a market buy, I bought right there. It instantly enters, right? Now, the cool thing about limit buys, buy limits, is what you're doing is, so you're not staring at the charts 24/7, right? You could literally just put in an order. Say the market was up here, okay? And you're thinking, okay, what I'm going to do is I'm going to set a limit, and this support zone right here, somewhere in here in this support zone, for a buy, a limit buy order. And what happens is when the market comes down, and if it hits it has to hit what numbers, what price you put in for the limit order, then you don't even have to be looking at your computer, your phone, anything. It will just enter that buy position at the price that you set. And the same goes with the sell orders. You put in a sell order right here. Market will automatically, when it hits that price, boom, sell limit order. Now, the difference between the buy stops, okay? This is where it's different. So on the buy stops, what happens is, actually, let me do this. So order placed above current price, and price continues to go up, okay? And the same on the order type for the sell stops is order placed below current price, and price keeps going down. So what we will do is on a buy stop would be, say that you're confident in the support zone. Price comes down to here, but you want to see like just a little bit more of a push up above this resistance. So what you do is you put a buy stop right here. So when price gets here, comes up, and you can actually stack them too. So say you did the limit buy here still, okay, you did the limit buy there, it triggers, boom, you're in this bottom position, but then you also place a buy stop here. So when price comes up and hits it, it enters the buy, hoping that it's going to continue to go higher, which in this case, it clearly did. So say you did that limit buy here, and you did the buy stop here. You would have entered a position here, a second position stacking, which is called stacking. We talked about that yesterday. Boom, continues higher, pulls back, could have had a buy limit order there. You could have triple stacked that. Boom, took profit. And that would have been actually a decent level to take profit. If we're looking down here, sorry, 1 second. If we're looking down here, it would have actually been a good time to buy at or sell your positions at the 786. You see how these Fibonacci levels, how they're magnets to the market. I guarantee you, Suey will next hit, maybe not today or anything, but, maybe next week. It's going to hit this. It's going to be a magnet to the 125. It's going to be a magnet to the 141. And it will attract these parts of the market just by looking at this Fibonacci. This is a tool where you can essentially figure out where you want to set your take profit zone. When I say take profit, when we enter a trade, right? And it doesn't matter if it's spot or leverage. You can do it on both sides. So say we entered the trade here, right? This indicates, which I'm going to redo for you guys. I'm taking a long position. And this is all on TradingView, where you mark everything up. I don't enter trades on TradingView. You just mark up the charts. So then this is basically your drawing board, right? You mark everything up. You analyze the market on here. And then you go take your trades on your phone or whatever exchange you're using, right? So anyways, and the one cool thing I was going to mention, which I'll do another video on, is the demo trading with fake money. Like I said, you can actually do it right on TradingView, and back testing going back in time, and you can trade going back in time and practice with a demo account back in time. And I still do it to this day, but I used to go all the way back in time and just do replay mode all the way up to the current time. And I did that with my favorite pairs, gold, Bitcoin, Solana, etc., etc. And it made me learn how this currency, asset, commodity, whatever I'm trading, how it moves. Because everything has a specific special characteristic to each currency, how it moves, how it trades, what it correlates with, all that stuff. And we're going to get more into that, don't worry. But so now that you understand the orders, right? So say we took this trade down here in the support. So when I place my trade on there, I'm going to have what's called a stop loss and a take profit, okay? And you manually enter them in. And the stop loss means you put it down here. Let's just say this is what the trade, and it's actually pretty much what I did on my trade. This is a trade I'm currently in right now. So my stop loss was actually really tight. You want to go below, right? You could have went below here. You could have even went below to the 7-1 level, right? Either way. But obviously risk management comes into play when your stop loss is bigger and bigger. Risk management is something we're going to have to do a whole video on, because it is one of the biggest key things when it comes to trading, investing, all of that. Risk management is, without that, you got nothing. You're just throwing darts at a board. And it took me not a super long time, but it took me a little while to fully understand, like, I got to really track this. I got to have my risk management to a T. Because of my strategy and my risk management, I could literally win 4 trades out of 10, even 3 out of 10, and still be profitable. And I'm going to show you guys the same thing, okay? But, so on this trade, I did actually just go right below this support. I'll zoom down to the 15 minute, okay? So I went right below this support here, okay? So, and then I set my take profit right at $4, because the market loves whole numbers. Doesn't matter what you're trading, the market reacts to whole numbers. Remember that. Whole numbers are always key to whatever you're trading. And don't get me wrong, maybe there's something out there that I don't know about that doesn't get attracted to the whole numbers in the market, but I haven't traded anything or seen anything that doesn't like getting to the whole numbers, because it's just always a magnet in the market. And one of the AI tools in the company that I'm in, we have AI scanners, right? And one of them is just for trading gold, the commodity gold, and it uh it really does break down everything. And I could do a video, maybe I show it soon, but it breaks it down all into whole number zones, and it's interesting how much it hits. So back to this. Obviously we're still currently in this, and next, and then obviously this is my take profit zone. So if on the stop loss, if the market comes down to your stop loss that you set, then the market will automatically sell itself off. So that way, you know what you're risking, right? You know what your stop loss is. You know how much money you'll lose. Then you have your take profit. So you set that, so then you don't have to stare at your trade for however long. You can literally just see or place your trade, and you trust your trade, let it ride. Sure, there's times where you might check it and decide just to sell it early, okay? I'm in this trade right now, perfect example, and it really depends on how it's going to react when it hits this resistance right here, or even this one, because I really want to try to get to $4. That's my take profit. But we've been continuing to make higher and higher highs. I'll be doing another video on, how to read higher highs, higher lows, lower lows, etc., etc. That will be in the next video. So you don't always get the exact take profit you want, and sometimes you have to close it early. Sometimes your trade reverses on you so quickly, but that's why you have stop losses and take profit zones. So then you know where your maximum risk is at and where your reward is at. Your risk to reward ratio is very important. But I'll be honest with you, this trade's looking great. It really is. Solana's starting to pull back though. That's not good. Ooh, Bitcoin too. Look at that. This is interesting because this could definitely get. Let's see. We'll see how it plays out, but looks like Ethereum's catching some attention today. It's starting to pick up a little bit. Not too much, but okay. Solana might be coming down now. We shall see. But the next thing I want to talk about before ending this video is candlesticks, okay? So I have this pulled up just to make it a little easier. Candlesticks are a way to represent securities price data over a period of time and are used to analyze price trends. Each candlestick has 4 parts that indicate the security's open, high, low, and close prices for that period. So now let me show you what I'm talking about. Every candlestick, doesn't matter what time frame you're on, you can go down to the 1 minute, you can go all the way up to the daily, weekly, monthly. They all have this, and this is called the body of the candlestick, right? We all know that bullish candlesticks are green, unless obviously you change your settings. Some people like their candles black and white, or I've seen all types of stuff, neon colors, and some people like a light background. I prefer the dark background. So I'm just going by the basic traditional green and red candles, right? To me, they're the easiest to look at. But whenever we have green candles, it means the buyers are moving forward, right? The red candles obviously represent the sellers, and they're coming in. And what I was gonna say is every candle, bullish or bearish, has a body, a wick, and you got the highest point, and the closing of the body is right here. So the bottom of the body on either one well, on the bullish side is the opening, right? So this is where the candle opens at. The price where when that candle, say you're on the 15 minute or the 1 hour, okay, 1 hour time frame. So we'll say this is a 1 hour candlestick, okay? So right when the hour on the second lands on that time and the candle starts, this is where it opens at, okay? The bottom of the body of the candle is where price starts, okay? Now the bottom of the wick is saying that, hey, this is the lowest price in that 1 hour candle that price got to. And then this is obviously the highest the price got to. So the price on that 1 hour candlestick got all the way up to whatever price at the top of that wick. But then where it closed, this is where it's important. Where did the candle, that 1 hour candle, where did the price close at? And then we're going to the next candle, okay? And this could be on the 5 minute, the 1 minute, the 15 minute. It's all the same. Understanding how candlesticks and how to read them, it's all the same. I'm just going by the using the 1 hour as an example for this, okay? But it really doesn't matter. You're gonna see this on any time frame. So with that, on a bullish candle, now we know the top of the actual body, not the wick. This is where the price closed at for that 1 hour candle. Now, for the bearish candle, it's just flip-flop. So, when it starts at a bearish candle, the opening would be at the top of the body, and the closing would be at the bottom of the body. So, it's just flip-flop from the bearish candle, okay? Opening on this side, closing at the top of the body, opening at the top of the body on the bearish, and closing is at the bottom. Now, here's also, as you can see, some different candlestick patterns. I'm not going to entirely go over all the patterns today or anything, but it's very easy to just Google candlestick patterns for trading. It doesn't matter if they're for crypto, stocks, or Forex. They are all the same. I mean, a candle is a candle. So there's lots of different patterns that people look for. And there's a lot you can learn from them. This was actually a really good, I like this image right here, to be honest. It's just real basic and simple. Maybe I'll use it for something. So that is the basics for the candles. There's all types of patterns that we could go over on another video, but I'm trying to keep this basic for today, just step by step for you guys, so it's not too much information at once, because sometimes it just can get overload, right? And then I want you guys to retain the information that I give better. I just remember when I first started this, I felt like, I got into the company that I'm in to learn trading and investing, and my strategy was actually learned from one of the guys that's a forex educator and trader, and I just applied that same knowledge and everything to day trading crypto. Like, that's what I'm trying to say is, like, people that trade forex, stocks, crypto, sure, there's differences in each market or whatever you're trading, commodities or whatever. There's differences in everything, don't get me wrong, but the strategies that you learn and get down, you can take them to any market, but then apply the little bit of difference that each, maybe crypto has compared to stocks, depending on, how much they can move in one day. Obviously, we all know crypto can move faster than any other market or currency. There's nothing that can move as fast as crypto. I'm sorry, but I just saw that XRP is hitting $1.20 right now. Again, it was at $1.26, but it's really wish I would have gotten into this one, I'm not gonna lie. But I missed it. but I did get into Sui. I'm still in this Bitcoin trade. Oh, it's getting okay, and then also the Solana. So that's the thing, though. I couldn't enter. I could have, but really I can't because I'd be breaking my rules, breaking my strategy. It'd be called over leveraging. You know, I already have 3 trades running from the last. It's been about 2 days now that I've been holding these. If I would have entered a 4th trade, it could have just kind of set off my risk management, and we'll obviously dive into that more later. So, anyways, today just wanted to go over those basics, order types, candlesticks. This is going to be set into a playlist called the All In Bootcamp, and this will be video 1, but I might have a part 2 to video 1, but either way I'll have it lined up where you start here and end there. Okay, thank you guys for tuning in. Please like, comment, subscribe. Anyone that needs help, just message me. All my social media profiles are linked to my bio and on my videos. So have a good day and see you soon.